members.
Sure. Thanks. And I think, Vinay, my next question to you is, being somebody who's part of the capital market, we really haven't seen so much of a discussion around adoption of these kind of technology and specifically, blockchain in your industry. And we are talking about a shared economy. We are talking about a lot of things that we can, take from the others. And Sudhin talked about collaboration per se. And for the first time, sincerely, with this consortium that you're forming, we are starting to see the financial institution now starting to collaborate, take from each other and not say that, let's develop everything right from scratch. How are you seeing, something like this becoming mainstream for the capital market? What are those things that one needs to do to be able to make sure that, adoption is there?
So as you know, Rachna, in India, a regulator plays a very important role, especially in the capital market, for it to kind of adopt to new technologies. And you're right, absolutely right, that you don't see a lot of use cases or talks around the blockchain in India compared to, what you see internationally. And to my mind, if you ask me, there is a huge advantage of blockchain in the whole broking industry or the wealth management space for the retail customers. So I'll tell you the opportunities that lies ahead. So typically in the wealth management firm, there are three important processes that has huge customer experiences. The first is the customer identification and verification. So it's more to do with the identity. So that's the place where kind of ask for a lot of documents to verify the veracity of the customer details. Obviously, the Aadhaar is helping us a lot now, but still it means a physical interaction because somebody has to go with a biometric device to the customer place so that he takes his thumb impression or a retina scan. So we are not really moving fully digital, until unless you kind of adopt to this kind of technologies. And then the way the blockchain can really help is because it's more of a public ledger and the data is available to everybody and it's more authenticated. It can't be modified, so you can really build trust on this data and use it directly to kind of onboard a customer. The second important aspect is to determine the financial ability of the customer and accordingly give him the kind of limits saying, this is the amount on which he can transact. So in absence of any real visibility of the customer information, we end up asking for some collateral and margins from the customer, So which means for a customer, before he decides to trade, he has to transfer some amount of margin and collateral with us, and that will be lying idle till the time he really transact on that amount. So if you ask me, it's a absolute inefficiency because of the customer capital is lying idle so that, he can trade when he wants to trade. Again, in a blockchain, based on, whatever we understand, the information of customers' balances, the information about customers' past transaction can give the brokers the ability to give the customers limit on the fly. So you don't have to necessarily ask for any amount of collateral, any amount of margin to be paid upfront and, to be kept with the broking house. The third important aspect is the settlement. And that's how where, you have those clearing corporation and, trade guarantee funds, you create a lot of those infrastructure to manage the counterparty risk. So again, I think, there with the ability to settle the trades. So today, fortunately, with the advancement of technology, the trade execution happens real time. The trade matching and order matching mechanisms have already at its peak. But once it comes to settlement, it's typically like, T+2 or T+3 settlement, So the whole trades get settled only after a couple of days, after it is confirmed. In this whole new way of dealing with customers, you can actually settle the trades immediately, And the amount of efficiency that it brings, the first thing is the whole counterparty risk goes away. You don't really need a clearing corporation to give you a guarantee of the trade settlement. The efficiency of capital improves multiple times, because not only it's customer capital that is lying with you, during this whole T+2, T+3 journey, a lot of brokers' capital is also deployed to with the exchanges, to give the confidence, to the whole ecosystem that the trades will finally get settled. So if it starts getting settled real time, the capital efficiency will go multifold from here. And finally, in terms of the customer confidence in the whole ecosystem will be far more higher, because the trades are really getting settled on a real-time basis. That means somebody is buying something, he pays it immediately and he gets it. So it typically becomes an OTC kind of trade, and execution, which will improve the customer trust as well as the transparency.
No, good, and I'm hoping there'll be another consortium coming from the capital market soon. So, Paul, blockchain everywhere, and so little standardization. There's something very interesting that 10x does. I would love, for you to just spend a moment and tell the audience that, and also tell us how we, sort of creating this network of blockchain.
Right. So what we do at 10x, maybe we have to go back a bit of the really fundamental of blockchain that we see is actually the first time that you can turn something that has value or represent value into a digital world that you cannot just click copy and paste, right? So that's really the fundamental thing that, and then the first use case, of course, is money or Bitcoin. That's back about, 2008 or 9, right? And then if you fast forward, that is really interesting thing from World Economic Forum that they said in about 8 years from now, the 10% of world GDP will be stored and transact on blockchains. And I think we at the right pace that going to achieve that, because back from 2008 and 9, the industry actually doubling every year. And if we keep up this pace, we're actually gonna reach that. And I don't see anything actually stopping that. And then come back to what we do now at 10x is we see a lot of institutions and also the public blockchain as well. There's so many of them right now. In fact, it's more than 1,000 blockchains existing today. And if the history gonna repeat itself, like before you have so many intranets or so many databases that you can talk to each other, if you connect them all, or if you can connect all the blockchains, and then you can make it a really good network that you can communicate between that, the sum of the network is actually greater than all the parts, right? So that's essentially what we do at 10x. We develop a protocol. It's really thin protocol. It's really similar to TCP/IP. That is really, really simple. Therefore, you can transfer access between blockchains, and therefore you can create a network effect on that. And the reason we're doing this, because we see it's really important that this technology gonna move forward. And our vision is we really want to reduce the cost of transactions, because if you have a network effect, then right now the cost of transaction, if you see the report that if you can reduce the cost of transaction by 1 basis point, you can pretty much in theory double the wealth of people. I think that's really powerful impact that we're really looking for into our company. And to be fair, I think banks or institution is really, really playing really important role in this technology moving forward, because I think banks and regulation and institutions still have really essential thing into the network or into the money, which is trust. And if you're gonna build the new system without any trust, it's really hard for people to actually move forward and do this. So this is what we see going into the future.
Excellent. We'll just stay with you, and possibly after that, Hitesh, the question to you is, and when we started talking Bitcoins, I think there are 21 million Bitcoins is max that we can go to, and over a period of time, my sense is that'll become more art than, Bitcoin possibly. But coming to blockchain itself, scale is an issue, right? Infrastructure is an issue. So while we are grappling with the use cases and we are talking about outcomes, outcome has its own limitation because, getting scale is the issue. Tell us a bit more about, how you're seeing this entire thing scale to be able to get actually blockchain into mass market, if I was to use that term.
So the biggest concern with scale as it is today is the Bitcoin consensus protocol is based on proof of work, which prevents a a lot of transactions from happening. The current limit is around 7 transactions per second. But there are a lot of other consensus protocols that are evolving. Private blockchains, like what are more likely to be deployed in the financial sector, is more authority-based consensus. So the scale is not going to be the limiting factor, but it's more about, do we have all the pieces come together, whether it is regulatory, whether it is ubiquity of blockchains, whether it is the industry talking to each other and building out protocols to agree on standard open APIs. I think that's going to be the more limiting factor to adoption of blockchain rather than pure technology limitations. Like our Paul is working on a network of blockchains. These will get solved. That's for sure. Yeah.
Sure. So coming back to you, Sudhin, and tell us a bit more about use cases per se. What are those use cases which are important for the bank? Something that you think are done and dusted with, something that you've done, implemented, but something that you think you would really, really want to see happen in the future then?
So we did work on a pilot with IDRBT, which is a unit of RBI, as well as a blockchain company called Monetago. This was specifically on trade finance and a bit of remittance. The outcome was that we did this pilot and we developed a white paper, which was presented to the RBI. And I think if you ask me about the outcomes, it was a mixed outcome, because something like remittance or trade finance is already, for example, let's take just remittance or payments. Something is already covered by SWIFT, right? SWIFT MT103 would cover that, right? Can you replace that by blockchain? Well, you can, but what's the benefit? Well, there's no real benefit, because as you pay for SWIFT, you're also going to pay for the blockchain technology, right? But going forward, I think we have to look at this differently. And when we are looking at, probably if this was version 0.1, and we're looking at version 1, I think we have to think differently and creatively. And for me as it stands, and let me wear the technology hat from an innovation standpoint, I think we don't look at, as a bank from our global IT center, we don't look at blockchain just as a distributed ledger technology, right? We're looking at it as a distributed workload. We are just looking at it, can we look at it as a distributed messaging? Can we look at it as a distributed settlement? Can we look at it as a distributed audit? Can we look at it as distributed transactions? And I think once we go on with this kind of thinking, which can have a lot of unintended consequences, of course, but looking at the positive side, I think if we look at wearing a different hat and creatively looking at it, I think there are going to be far more opportunities, and I think that's the way the technology would really get integrated with all the different functions of the bank or institutions and take it ahead. So I think a lot of innovation is required on this space. A lot of, and especially for startups, I think my message is that this is the best time for startups to really develop this technology. The government, the AP government is so serious about it. Mr. Chaudhary has really been an inspiration for just in one day, right? Banks, State Bank, we can invest in startups. We can also procure on a fast track basis products and services. So I think if even the startups can take a creative view and just keep focused on the technology, right? Today, if we don't understand the code and we don't understand the technology, we're not going to really understand any technology or any platform, right? So I think this, so looking at it differently, collaborating with the larger ecosystem, and taking it ahead, I think would be the best way. And I think we as State Bank, we want to be we want to build one of the largest blockchain platforms. And we see this as purely a technology play. On the regulatory side, well, regulations are always going to be there, and it's the central banks. I mean, they are first. They are the regulator, and they will always want to safeguard the citizens of that country, right? And we are also working with them actively. So we presented the white paper. We'll also present the next version of it and take it forward.
So actually, I'll come back to you on a few use cases from insurance perspective. Tell us more what's happening. Which are the areas in insurance where you're seeing the maximum application of blockchain come from?
So there were two critical areas that the consortium members dwelled upon, and one was the customer focus, and the second was the healthy growth of the industry. So from the customer focus perspective, we started looking at which is that one particular step in the overall value chain of life insurance business process for onboarding a customer that is laden with heavy cost and is also resulting in some degree of inconvenience to the customer. And obviously, medical test came as one of those low-hanging fruits that we could tap upon. Now think about a customer who would want to get certain quantum of risk covered through multiple relationships with life insurer. Now, if the life insurance company asks the customer to go through the medical test, the erstwhile approach was customer would not want to get pricked twice if he or she chooses to buy product of that caliber from two insurers. Here is a classic case where if we as life insurers came together and shared the medical report to the extent that customer provides consent for, it will be a win-win situation. A customer does not have to go to the medical test twice, and B, we also save the operational expense that is associated with medical tests. So that's one area where we saw that customer focus and the operational efficiency could be synergized together in this collaborative use case. The second area about the healthy growth of the industry focuses on the quality of the business that we underwrite. And the focus was heavily placed on agent recruitment, trying to make sure that if there is a background of an agent mis-selling, that information is shared. That also ensures that there is a very strong responsibility felt by all the intermediaries who are engaging with the customers and showcasing the value of life insurance products. Because unlike some of the other industries, life insurance still has products that need to be pushed. The products require deeper engagement, deeper understanding of the needs of the customer, be it in the area of financial need or the medical need, and the protection that the customer may want to take. Now, this is an area where we strongly felt that if we came together as an industry and exchanged this information, it would create a strong deterrent for an intermediary to engage in inappropriate practices. So this is another area where we could come together and identify the use case. So far we have identified 6 broad use cases that we can exercise on a blockchain. And with more and more members coming on board, we are sure we will find many more use cases. And the time is ripe for us to hit the road. And we will be engaging with a lot of startups and trying to tap their brains, their intellect, in driving the implementation in an agile way.
Thanks. And, Paul, well, think of something like this. And, let's say we are talking to our clients in an insurance sector, per se. I'm just using that as an example. A lot of them are talking about, let's say, autonomous cars, connected vehicles. They're talking about, using wearables, IoT, sensors to be able to, track a lot. And when we talk about blockchain, it seems to, just exist in isolation, as if, the rest of the technologies world doesn't exist. How are you seeing all of that come together? Because at some point of time, you will need to marry that.
Right. I think if you go back to, or if you see the IoT is coming up, and then it's gonna be so many connected devices, and then they all send this information to each other all the time, and then it's really logical sense that you need to trust the data coming from the device, especially let's say it's gonna be autonomous car driving on the road, and then if send the wrong signal, or you cannot trust the signal, that is really or life or death. And then it's really simple thing that blockchain could come in to actually be a verification of the authentication of the data that the IoT shares. It's not only cars, but it could be anything that you need to trust the data that your device or anything send out to the network. So I think that's really, would be only the evolution of blockchain that could come into IoT to the future.
So you're talking about interportability not only between blockchain but with other systems as well, as this entire thing develops. Vinay, my last question possibly on this particular panel and to you is that while something like a blockchain, the philosophy itself is around trust. But the moment you go and talk to a lot of people in the industry, they say, what about security? So how often does that thought come to your mind, and how does one address that?
I mean, see, my view is whenever you will talk about giving more flexibility, more space to the consumer to trade seamlessly, to trade online, obviously there will be threats that will be coming around it. So I think, it's always has to be a balance. You can't really think about giving more flexibility to the customer, making the trades happen faster, and you say, ki, everything is safe and secure. But we have seen from our past experience, when we talked about online trading, maybe 7, 8 years back, there's a lot of threat about how safe it is, what will happen if somebody, kind of gets your access and put some trades. But over a period of time, we have found out ways to kind of manage it, and we have not found any major security concerns that has erupted, because of giving